Ever wondered how some people seem to get paid just for owning investments, almost like magic? What if I told you that magic has a name, and it's called dividends? And what if I further told you that getting a slice of that dividend pie, especially here in Canada, is easier than you think, thanks to platforms like Wealthsimple? You see, the world of investing can often feel intimidating. Jargon like P/E ratio, market capitalization, and futures contracts gets thrown around, making it seem like you need a finance degree just to dip your toes in. But what if we stripped away all that complexity and focused on one of the most fundamental, and frankly, most rewarding, aspects of long-term investing, dividend income? This isn't about day trading or trying to time the market. This is about building a portfolio of quality companies that, as a thank you for your ownership, share a portion of their profits with you, directly into your pocket. Today, we're diving deep into the fascinating world of dividend investing, specifically through the lens of Wealthsimple. We're going to demystify how Wealthsimple handles your dividend income, from the moment a company declares a dividend to when that cash lands in your account. We'll explore the different types of dividends, what they mean for your investment strategy, and crucially, how you can leverage Wealthsimple's features to maximize your dividend earnings and potentially even build a passive income stream. So, let's start with the basics. What exactly is a dividend? Imagine you own a small percentage of a highly successful company. When that company makes a profit, they have a few choices. They can reinvest that profit back into the business to grow it, they can pay down debt, or they can distribute a portion of those profits to their shareholders. That distribution is a dividend. It's essentially your cut of the company's success, paid out on a regular basis, typically quarterly, but sometimes monthly, semi-annually, or annually. Now, why do companies pay dividends? It's not just about charity. Paying consistent dividends can signal financial health and stability to investors, making their stock more attractive. It can also appeal to a specific type of investor, those looking for income, like retirees, or those building a passive income stream. For these investors, a steady dividend payment can be as important, if not more important, than the stock's capital appreciation. So, you've decided you want in on this dividend action. How does Wealthsimple fit into the picture? Well, Wealthsimple, at its core, is designed to simplify investing for everyone. This philosophy extends beautifully to dividend investing. Whether you're using Wealthsimple Trade for self-directed investing or Wealthsimple Invest for their robo-advisor services, the process of receiving dividends is surprisingly straightforward. Let's break down the journey of a dividend payment within your Wealthsimple account. It typically starts with a company announcing a dividend. This announcement will include a few key dates. First, there's the declaration date. This is when the company officially announces its intention to pay a dividend, along with the amount, record date, and payment date. Next, and this is crucial for you as an investor, is the ex-dividend date. This is the cutoff. If you buy shares on or after the ex-dividend date, you will not receive the upcoming dividend payment. You need to own the shares before the ex-dividend date to be eligible. Think of it like this: if you want a slice of cake, you need to be in the kitchen before the cake is served. Then, we have the record date. This is the date on which a company determines which shareholders are eligible to receive the dividend. Usually, this is 2 business days after the ex-dividend date. Finally, there's the payment date. This is the day the company actually distributes the dividend payment to eligible shareholders. On this date, you'll see the cash land in your Wealthsimple account. So, you own a dividend-paying stock on Wealthsimple Trade. The company declares a dividend, and you held the shares through the ex-dividend date. What happens next? On the payment date, the cash dividend will appear in your Wealthsimple Trade account. It's not a physical check. It's a direct deposit into your cash balance, ready for you to either withdraw, spend, or, ideally, reinvest. And this brings us to one of the most powerful concepts in dividend investing, dividend reinvestment. Imagine you receive a $10 dividend. Instead of withdrawing that $10, you can use it to buy more shares of the same company, or even shares of a different company. This is where the magic of compounding really kicks in. Each time you reinvest your dividends, you buy more shares. More shares mean you'll receive even more dividends in the next payment cycle. It's a snowball effect that, over time, can significantly accelerate your wealth accumulation. Wealthsimple makes this incredibly easy. Once the dividend lands in your cash balance, you can simply use those funds to purchase more shares with a few taps. There's no complex drip program to enroll in like with some traditional brokerages, though some companies do offer their own drips directly. For most investors, simply reinvesting the cash through Wealthsimple Trade is the most straightforward approach. What about Wealthsimple Invest, their robo-advisor service? If you have a diversified portfolio with Wealthsimple Invest, it's highly probable that some of the ETFs and even individual stocks within your portfolio pay dividends. Wealthsimple's algorithms are designed to automatically reinvest any dividends received back into your portfolio, maintaining your target asset allocation. This is a fantastic hands-off approach to dividend investing, as it ensures your money is always working for you without you having to lift a finger. You literally just set it and forget it, and your dividend snowball grows on its own. Now, let's talk about the different types of dividends. While cash dividends are the most common, you might occasionally encounter other forms. Cash dividends, as we've discussed, these are payments made in cash to shareholders. This is by far the most prevalent type. Stock dividends, instead of cash, the company distributes additional shares of its stock to existing shareholders. While you don't receive cash directly, your ownership percentage in the company remains the same, and if the stock price rises, the value of your increased shares will also rise. This can be less common but good to be aware of. Special dividends, these are typically one-time, non-recurring dividend payments made by a company. They often occur when a company has an exceptionally profitable year or sells off a major asset and wants to distribute a portion of that windfall to shareholders. Property dividends, very rare, but a company might distribute assets other than cash or stock, such as products or property, to its shareholders. Don't expect to see this on Wealthsimple often, if ever. When considering dividend investing, it's also important to understand the concept of dividend yield. This is a financial ratio that indicates how much a company pays out in dividends each year relative to its stock price. With that said, thanks for watching and until next time.